Welcome. In this video presentation, we will see how to use Goodwill Commodities Indicator. In this chart menu on the left hand side, you can see GWC. In this folder, you have two indicators. One is GWC and the other is GWC Pro. Both are different set of indicators with different formulas and trade strategies. In this video presentation, we will see how to use these two indicators and how to place target and stop loss while using these two indicators. And these two indicators works well with 7 minutes candlestick chart. The default candlestick chart you should keep is 7 minutes. Normally you will see this 7 minutes candlestick look like this in crude oil. Then go and double click on this indicator. You will see the next window opens. Then you can close this so that you will get a clear picture of GWC indicator. The speciality of this indicator is if there is any potential trade entries, our indicator itself will show where to sell or where to buy with the price mentioned. By default you will get the trade signals. The next thing what you need to do is you need to place your target and stop loss. Here in this GWC indicator, all the targets and stop loss are predetermined. You can, once you get the trade signal, you can place a 20-point stop loss and 20-point target. For example, for this trade signal 3884, once you got the trade signal, you can place a stop loss around 3904 and your target will be 3864. So it is going to be 1:1 ratio, 20-point target and 20-point stop loss. So this is one type you can use in crude oil. Whatever signals you are getting in 7 minutes, particularly in 7 minutes, it works well in 7 minutes. And we have tested this. You have histories of all the data here. For any commodity, for 1 year, you can backtest on seeing all the symbols. We have history of data. You can backtest and verify that. So for crude oil, it is going to be 20-point target and 20-point stop loss in GWC indicator, and it will vary for different commodities. I am going to explain. It works well and tested for 4 commodities: crude, natural gas, copper and nickel. The next is natural. For natural gas, everything remains the same except the stop loss zone. For natural gas, once you get any trade signal, for example 191.7, you can place a stop loss below 1.6 points. So any signal, the bottom stop loss is 1.6 points and the target is also 1.6 points. So 191.7, you can place a stop loss around 190.1 and you can place a target around 193.3. So it is also 1:1 ratio. It differs for commodity to commodity. For natural gas it is 1.6 points. Let us see for how it works in copper. For copper, it is going to be 2 point. For example, if you sell at 410.4, the stop loss is going to be for 412.4 and your target is going to be 408.4. So for copper, it is going to be a 2-point stop loss and 2-point target. Let us see how it works in nickel. For nickel, it is 6-point stop loss and 6-point target. For example, so if you have gone short around 880, the stop loss is 886 and the target can be 872. So for 4 commodities it varies. For nickel it is 6-point stop loss and 6-point target, and for copper it is 2-point stop loss, 2-point target, and for natural gas alone it is 1.6 and 1.6 target and 1.6 stop loss. For crude oil it is 20-point stop loss and 20-point target. So this is the wonder with GWC. You will get automatic trade signals where you should buy and where you should sell, and within this also we have included this candlestick button to guide you. So there are 2 types of candlestick button you can see. One is completely red color and the other is completely blue color, which indicates the market is bullish and the market is bearish. So inbuilt we have certain indicators also. At times when the market is going for selling, you will get a red color dot at the top. At times you will get a red color blue color dot at the bottom. These are the extra indicators we have added in order to assist you but the major part is it will show automatic trade buy and sell signal. You can go for trade entry by placing predefined target and stop loss. So that is next what we will see how the GWC Pro indicator works. Both are different, entirely different trading strategies and trading formulas. Now let us see how GWC Pro works. GWC Pro for crude oil. Now we are seeing crude oil chart. I will explain how the GWC Pro indicator works. It works in the same pattern. It is designed to provide you automatic trade buy and sell signal, but the only difference is it will not give you frequent trade signals. For a month it may give not more than 15 to 20 trade signals, but the potential for profit is also quite higher compared to GWC. So but the stop loss is also bit different, so you need to follow the presentation carefully. So whenever there is a trade entry, it will show you automatic buy and trade signal, like how it shows 3,973. It's a buy, and again it had provided a buy. Always it provides trade signal within these two bands. It will not provide you trade signal above somewhere above or below this band, but within this band it provides trade signal. But it is a signal to signal trading. So how you place a stop loss is once you generate any buy signal or sell signal, the maximum stop loss for crude oil is 40 points, 4,000 rupees. So whenever you get a trade signal, you place a stop loss at 40 points and wait for example, you take this 3,945. So when you get a trade signal, the maximum stop loss for this 3,905. So immediately you can place a stop loss in this particular zone. What happens is that once you place a stop loss, it will give you a reversal signal like what it had provided, 3,926. But in this case the stop loss got triggered. For instance, for just for education, assume that the stop loss has not triggered, and immediately now I have increased the stop loss just for explanation. So after placing an order, immediately you will get a sell signal. Once you get a sell signal, consider that as a stop loss and close your position. I am going to repeat it again. Once you get a trade signal, the maximum stop loss is 40 points. But once you place a stop loss and the trade is continuing, so the trade is continuing, and before triggering the stop loss, if you get a sell signal like how you got it, for this instance I have increased the stop loss, but the maximum stop loss is 40 points. You need to reverse and consider this as your stop loss, and you need to reverse your position at regular intervals. Whenever you get a trade signal, you need to reverse it at the same price point. So the maximum possible loss is limited to 40 points. And the expected targets, we have three level of targets. One is 20, 30 and 40. Initial first target will be 20 points in crude, second is 30, and the third is 40. You can wait for 40 points. It has got the potential to give you big profit, since it does not give frequent entries. So it is very clear for crude oil. It is a maximum is 40 points stop loss, and in between that, if you get any reversal entry, consider that as a stop loss, square off your position and reverse at that particular point. That is a way you can trade with GWC Pro. Let me explain you with few other examples. Let us see in this case. If you see, the sell was generated at 3,894. Since I had mentioned the maximum stop loss will be 40 points, it should be 3,934. But what happened is that once the trade was continuing, it has provided another trade signal at 3,903. What you should do is that you should consider as a stop loss and close your position and reverse at this particular point, so that you will get a big profit, and also that will minimize your loss. So why we are requesting you to place 40 point stop loss is for the safety purpose. If there is any spike, so you can be safe with your position. The maximum stop loss for GWC Pro in crude oil is going to be 40 points. Now let us move on to the next commodity. For natural gas, if you get any trade entries, for example, the buy was generated at 177.3, the maximum stop loss is 3 point. So again I am repeating it. Whenever you get whenever you fix the maximum stop loss, you may get alternate trade signals, that is sell signal in between. Then you should reverse the trade or close your existing open position at that particular point. This is for our safety. We are placing the maximum stop loss point, and the respective targets for natural gas are 2, 3 and 4 point. The first target is 2 point, second target 3 point, and the third target is 4 point. Now let us see how it works for nickel and copper. For nickel, the maximum stop loss point is 12. So here you can see the trade signal generated as sell trade signal generated at 882.7. the maximum stop loss is 894.7. it is 12 point maximum stop loss, and the expected targets are 10, 12 and 16. The first target 10 points, second target 12 point, and the third target 16 points. So the maximum stop loss will be 12 points for nickel. Again I am saying that it is just for safety we are placing the maximum stop loss, and in between that you may get some reversal point. At that particular point you can close your existing position and reverse your trade position. The maximum stop loss for copper is 4 points. So for example, consider the trade entry generated 412.45. the maximum stop loss will be 416.45. the maximum is 4 points, wrongly it is mentioned at 15.45. So the maximum stop loss zone for copper is 4 point, and the profit booking targets are first target 3 points, second target 4 points, and the third target is 6 points. So it is constant. Again I am saying that you may get a reversal entry within this stop loss zone. The maximum, it is a maximum stop loss. Once you get any reversal alternate signal, you need to reverse your position and close the existing position at the particular price. So this is how you can use GWC Pro indicators. If you have any doubt, please contact the number available in this video. At any point of time you can contact me, and we can clarify all your doubts. So thank you a lot for watching our video. Happy trading. Take care. Bye.